Hello, can you hear me, guys?
Yeah, loud and clear here.
Okay. All right. Oh, you're making us jealous with your beach background.
We can hear you very well.
Good afternoon, everyone. Can everybody hear me?
Yes, please.
Welcome, everybody, to this edition of the African FinTech Network, hosted by our wonderful colleagues at the Mauritius African FinTech Hub. I am pleased to have two guests joining me today for our fireside chat on regulating for innovation, and what we're going to hope to do with my two incredible guests, Dr. Patrick Conteh and Peter Onyango, joining us from all across the continent. So this is a truly Pan-African event. Dr. Patrick Conteh has over 25 years of banking and finance experience. He's the regional lead for the Cambridge Center for Alternative Finance, and he was previously the past governor of the Central Bank of Sierra Leone. Welcome, Dr. Patrick. And we also have Mr. Patrick.
Thanks, Hohete.
You're welcome. We have Peter Onyango joining us. Peter's joining us from Kenya. Peter is the principal specialist for risk and stress testing at the Capital Markets Authority of Kenya. And he's the member of the Sandbox Review Committee of the Central Market Authority. And they're in charge of reviewing FinTech and RegTech application. He was previously with KCB as the Regional Market Risk Manager. Welcome, Peter.
Thank you, Hohete.
And welcome all our guests. So what we're going to do is we're going to have Dr. Patrick set us up with a Pan-African view of what's going on in regulation and innovation across the continent. And then we'll do a deep dive with Peter on what specifically Kenya is doing, our pioneer in FinTech and mobile money. So Patrick, could you please describe or set the stage for us about what the current situation is for a typical central bank regulator or regulatory agency's mandate and operating environment?
Thanks, Hohete, and thanks to MAF, the Economic Development Board of Mauritius, African FinTech Network for AFF2021. Thanks for the opportunity. I'm here as regional lead representing Cambridge Center for Alternative Finance. Responding to your question specifically, Hohete, I think it goes without saying, both from research and, practical evidence, that FinTech are causing profound changes to the way financial services are being provided, especially here in sub-Saharan Africa, not only in terms of, access, speed of access, variety, choice. Most importantly, ensuring that services come outside the traditional brick and mortar. Whilst there are these benefits, out there, I think regulators, be them central bankers or otherwise, need to be mindful of the inherent risk associated with FinTech and the services they provide. So foremost, in pursuit of their primary mandate, let's say central bank, for instance, price stability or financial system stability mandate, the questions that come to mind when it comes to regulation is, foremost, is to be clear as a regulator, what are the objectives do you seek to pursue? Is it about promoting, innovation or competition? Is it about addressing the myriad of barriers or challenges to innovation in the space? Or is it actually about knowing what is happening in the market space, being more proactive, know exactly what is happening in the market space? Once you're clear as to your regulatory objectives, then you will have been one step towards deciding how to intervene. How do you intervene? To what we call innovation accelerators like innovation offices, sandbox, innovation hubs. You want to wait and see or test and learn. So I think any regulator in the region, these are the things, should be occupying your mind vis-a-vis FinTech and the way they are causing disruption to the provision of financial services.
Thank you, Patrick. Could I ask you, as regional lead for Sub-Saharan Africa, could you tell us which verticals are most ripe for innovation, and what are the emerging regulatory issues that you see on the horizon?
We are about to wrapping up. Well, actually, we have already wrapped up, our first SSA specific FinTech regulation report. So let me speak to a few important verticals here. One is digital payment. Digital payments is one of the key verticals in SSA in terms of volume, terms of number of transactions and volume. When it comes to regulation, this is one vertical where, I would say it's more generally highly regulated. But the regulation is showed that digital payment fall, our survey, our studies show that when it comes to regulating digital payment, it's over 85% of the 21 jurisdictions we looked at. Over 85% of those jurisdictions, they regulate digital payments using general frameworks. Only about 5% of those jurisdictions have bespoke or specific regulatory frameworks, when it comes to digital payments. Another vertical that is interesting to note in SSA is e-money. Again, this is taking profound, shape here in terms of volume and transactions that are happening. But on the regulatory space itself, you will see e-money relative to jurisdictions like MENA and APAC. In SSA here, in e-money. And what is good to note when it comes to e-money is that unlike digital payments, over 52% or so of jurisdictions we are looking at have specific e-money, bespoke e-money regulations, which is really a very good thing. And a third vertical we want to talk about is P2P lending, peer-to-peer lending. Again, this is the one I would say this is more challenging when it comes to regulation. I will not say sad news. The challenge is that over 40% of P2P lending in Africa, as we see it across those jurisdictions we are looking at, over 40%, are without regulation, or P2P lending transactions go without regulations. You have about 20% that use general frameworks to regulate P2P lending, and only about 10 to 11% have bespoke, specific regulations for e-money. Another vertical maybe we want to speak to is crowdfunding. Again, this, generally here again, about 30% of crowdfunding transactions in Africa, 30 to 33%, go unregulated, which is really very, very, very challenging. You only have about 17 or so % of crowdfunding transactions that have been regulated. Of that 17%, it's almost all of it is bespoke. So you have bespoke regulations of crowdfunding amounting to 17% and 33%, that is unregulated. And our studies also show that those who are considering regulations when it comes to crowdfunding also in same range about 30 to 33%. So if you look at those four verticals, digital payments, e-money, P2P and crowdfunding, you will see e-money is gaining more traction in terms of regulation. There is more bespoke regulations when it comes to e-money, and that is followed by digital payments. Third space, you have P2P and then crowdfunding, coming on the bottom of it. So that's the sort of overview of the way regulations, are responding to those four key verticals in Africa.
To follow up on that, those of us that work in the regulatory sphere always envision or imagine the private sector, all the stakeholders, the regulator working as one collaborative unit. So working across sub-Saharan Africa, what do you think would need to be present in order for this collaborative spirit to blossom?
Well, a lot of things need to happen. At a macro level, I think the most important thing is to ensure policy. There is national policy at the macro level, at government level. I applaud those countries in Africa, like in Mauritius, I think in Ghana, even here in Sierra Leone, where there is a government policy on innovation. There is a government policy on financial inclusion. I think that macro level, environment is very important because it provides the overarching, support for innovation to thrive. And that is very important for market development. Once that macro level thing is happening, I think it provides the environment for regulators to find it a bit easier to intervene in the innovation space. Let's don't forget these regulators have their primary mandate. For instance, the central bank, typically it's about price and financial system stability. So they often need to justify why would they want to intervene in innovation issues. But when you have this macro level background providing that space, it becomes more easier for regulators. But specifically, I think it is important for regulators to speak to each other. I think it's important for collaboration amongst regulators, because FinTech, these verticals, they cross across different sectors. You know, you have a FinTech that provides services that cuts across insurance, cuts across mainstream banking, cuts across pension fund. So the more it creates the need for regulators to, to collaborate, to communicate more clearly and respond to these issues. And importantly, you have cross-cutting themes that are important, that are affecting, regulations, things like data security, data protection, cyber security, AML, EKYC issues. These are cross-cutting themes for which you need more than one regulator to respond to them. So the more regulators speak together to address these cross-cutting themes, the more you have a macro level support at government policy level, I think the better it is for FinTech to thrive and thrive properly.
So now that we have the collaboration within jurisdiction, across jurisdictions, how then do we unleash the typically conservative regulator to become creative or innovative? What are your suggestions? You see,
well, I speak more as a central banker, so excuse me if I don't talk much about other regulators like the SEC, etc. From experience and from practice, central bankers are conservative in approach, for obvious reasons. Whatever they do is very conservative in approach. So I can understand at times why some central bankers are less responsive to innovation, because they think it's risky and they don't have the required competence and skill set to respond to what is happening. So I think foremost, the call is for central bankers to appreciate the fact that innovation is there and is here to stay. It's number two, the fact that FinTech are here to stay. The disruptions will continue. It will become more complex, more profound. Those are the realities. We cannot shy away from them. So the earlier regulators like central bankers respond or open up to learn, I think that's one major step, to accept the reality and open up to learn that reality. Because what is happening is that innovation is far ahead of regulation in sub-Saharan Africa, especially in the majority of these jurisdictions. So there is a lot of catching up to do. So one way to do that catch up is to accept the reality. Number two is to seek help. Our studies, when we roll out the COVID-19 resilience, the COVID-19 rapid assessment survey of both regulation and market development, one thing that came out in the findings was that regulators were saying they lacked the skill sets. They needed help. They needed technical assistance. I think it's good to make that known, that the space is beyond my capacity, is beyond my skill set. I need help. And there are a lot of institutions like ours, Cambridge Center. We provide varying forms. One typical form of help is our online CFTRI program for regulators, not only central bankers, but also stock exchange operators, et cetera, et cetera. It's a program where we look at all the most complex business models in different verticals, at least 14 or 15 verticals, for crowdfunding, crypto assets, things like innovation offices, sandboxes, you name them. We provide that, I'll call it, initial basics of how those models operate and how ideally should a regulation respond to it. So I think acknowledging the reality, seeking help, I think is very important. And so that an issue about capacity development is very important for regulators. They should be willing to seek help, find ways to create capacity, either internally or seek help from outsiders. I think those are very, very important. Acknowledging the fact that we need to change. We need to change the approach to regulation. We need to remain conservative, but open up to accept the reality or embrace the reality of innovation.
Thank you, Patrick. So I'm going to follow up this question. I'm going to throw the next question to Peter. So Peter, we know that Kenya with M-Pesa has been the pioneer in this. And one thing that was incredible was that the regulator recognized that they didn't have the knowledge ahead of time, and they gave the very famous no objection for M-Pesa to go forward. So specifically, can you talk to us, can you highlight Kenya, and can you highlight sort of the creativity and innovation that the regulator has shown, and also how Kenya is working towards harmonizing regulation with multi-sectoral stakeholders. Thank you, Peter.
Thank you, Hohete. From what you have just mentioned, you are right. I mean, Kenya is it's true that Kenya is the country that brought forth M-Pesa. I mean, since then, Kenya has become a very good hub for fintech innovation. And because of that, you'll find that the way I work, the Capital Markets Authority, decided to provide a favorable environment for these type of innovations to thrive by establishing a regulatory sandbox. So generally, a regulatory sandbox is a formal initiative where we can allow new products, services, or business models to be tested in a live environment on a limited time scale and limited scope, so that as a regulator, we can determine the appropriate regulatory interventions post-testing and to allow the innovation to safely operate in a wider marketplace. Notably, the sandbox is not an incubation hub. What I mean, it's not a physical space for companies to operate in. It's basically permission by the regulator to test in an environment that is live, and to test with basically with Kenyans, and in a controlled environment. And then after that testing period, you expect both the regulator and the innovator to learn more about the product, and henceforth allow the product to operate on a wider market by maybe giving, as you mentioned, central bank gave a no objection. So the same thing now, that's what the Capital Markets Authority will do, is give a no objection as regulations around that product is made. So it has been an interesting journey. We have successfully exited 3 platforms. One of them is called Pesesha Africa, that is a debt-based crowdfunding platform. Another one is called Innova Limited. It's more of red tech and data analytics. The third one is called Genghis Capital Limited, which is a collective investment scheme in which Kenyans are allowed to invest through their mobile phones. Thank you.
Thank you. Can you share with us, for all of our listeners across the continent, a little bit about the journey, a little bit about the pain points and the challenges that you've had? So you've told us you successfully graduated 3 of them from the sandbox, but can you tell us some of the pain points and the journey?
Okay, that's no problem. So, of course, it's a challenge when you try and move our mindset, because innovation is rapidly changing. So in the past, you'd find that if an innovator comes to the regulator, we used to tell the innovator, give us 3 years, let's make a regulation, and then we will allow you to operate. It was drafted and approved. After that, we developed the regulations, the sandbox regulations, and took it for public participation, where we could get, where now the public could give us their comments. So we took their comments, and the regulation was approved. Thereafter, we formed an internal committee called the Sandbox Review Committee. So I am a member of that committee. And that committee's job is to assess these innovative applications and products. So, of course, now when we formed that committee, it was important to do a lot of training, so that we can actually change our mindset and be open-minded, so that we can appreciate innovative ideas, moving from the past to the future. And immediately the sandbox was rolled out, we started having so many applications, around 20-30 of them, and some of them were also coming from cross-border. Some of them were coming from other countries. So in terms of the pain points,
Actually, let me ask you if, you know, the African FinTech network is dedicated to making sure that we have a Pan-African approach and that we can help support each other. So let me ask you, if there were 3 critical lessons that you could share with us that we could take to the continent from this journey that you've had with this regulatory sandbox and having multi-stakeholders involved, what would be the 3 critical lessons?
I think the lessons, number 1 would be, it's always important as a regulator to collaborate with each other. So you have maybe CMA, a Capital Markets Authority, collaborating with the central bank, so that we can assist these FinTech firms. In addition, it's also important for us to work with the FinTech firms, because as regulators, we are here to make the enabling environment, but the agility and the need for innovation is left to the private sector. The second one is continuous follow-up with the FinTech firms. It's important for us as a regulator to always talk to them, find out what is new, what is their pain points. Are they having any problems? And this is done all through, before the testing, during, and after. The third one is, remember, sandbox is not a physical space. It is just permission. So in order for it to work, as a regulator, you need to encourage innovation hubs in the country, so that these innovators can find a place that they can sit down. They'll have office space, internet, equipment, legal advice. So encouraging innovation hubs in the country is very important. Thank you.
Thank you, Peter.
Can I just weigh in if there's still some time on that last aspect?
Yes, yes. I was going to ask you to invite you, if you could share with us 3 lessons that you've seen with your work across sub-Saharan Africa. If you could give us examples of innovation and creativity across regulators.
Yeah, I think, as I said, we've just wrapped up our first FinTech regulation reports, hopefully to be published maybe by end of November. But the emerging findings, I would say a lot of good news. For instance, innovation offices. I mean, yes, innovation hubs and innovation offices are gaining traction. I think our count shows up to about 10 now in Africa. So too for sandboxes, from a few of 2 or 3, we're counting 11 across sub-Saharan Africa. So I think on the face of it, it's good. It shows responsiveness of regulators to innovation in the space. But it is important to point out, for instance, when it comes to sandboxes and innovation offices, you know, let's foremost understand the difference here. Innovation offices or hubs are essentially platform for communication between the regulator and the innovation, the innovators, for them to know exactly what is happening in terms of regulation, what is it that they need to be mindful of whilst they're going about their, you know, developing new products, new services, etc. You know, so that initial communication, that clarity, it helps to resolve a lot of uncertainties when it comes to regulating, you know, technology. That's very important. So once that's clear, it's migrate to the higher platform, which we call a sandbox itself, an incubating platform, you know, where people actually test their new products and services under the watchful eye. But the point I really want to emphasize is we see a proliferation of multiple sandboxes in jurisdictions. We have a jurisdiction where the central bank has a sandbox, the stock exchange has a sandbox. I think what we're encouraging authorities is a sandbox that is multi-sector in approach. So instead of having like 4 sandboxes in one small country, why will not the regulators pull their resources together? Because sandboxes are resource intensive. You know, you need a technological platform for it to operate. You know, so the fewer they are, the better and more effective they are. So our call is for regulators to work together more, have one innovation hub, for instance, one sandbox for small countries, you know, so that they can make the most of situation. That is the point I wanted to hammer home.
Peter, a word and we'll wrap up. Thank you very much.
Well, I will end from where I started, that FinTech are, you know, bringing about profound changes to the way financial services are being provided in the continent. And we see evidence that regulators are responding positively to those developments in terms of what we call the regulatory innovation initiatives, things like innovation offices, sandboxes, etc. Whether it is a test and learn approach is really good. And our latest study sees efforts at bespoke regulations for things like payments, things like e-money, verticals like P2P, equity crowdfunding. We can only keep encouraging regulators to move in that direction. Importantly, collaboration is very important. Collaborate amongst yourself, collaborate across jurisdictions. I think what is happening in countries like South Africa, Mauritius, Kenya, Nigeria is good example of collaboration. And then I think the important issue of the macro support from the top, from government is very important for innovation to thrive. So beyond and outside the regulators like central bankers, the stock exchange operators, government authorities, should support efforts at promoting digitization of their economies. That is the way the world is moving. Things are moving in that direction. There is no two way about it. We must embrace digitization of everything that we do.
Thank you, Dr. Patrick. Peter, do you have a concluding remark?
I have concluding remarks. I have to wrap it up quickly. I just wanted to stress that it's true that we have to do cross-border testing is important in Sandbox. That's why CMA is a member of the Global FinTech Innovation Network, which is a network of regulators that come together and look at applications together. Just to wrap up, I have also seen a lot of sandboxes around. Lately, we have had Chile, Peru, Greece, and Uganda have set up a sandbox. We also have FCA, who was a pioneer in sandbox, and they have moved from cohort approach to a rolling basis approach in terms of looking at applications. That's a style that we used from the beginning in CMA. And also to wrap up, I just want to encourage the public to go to our Capital Markets of Kenya websites. You'll find a Sandbox milestone report that shows all the key milestones that we have achieved. Thank you.
Thank you. Thank you very much, Dr. Patrick Conteh. Thank you, Peter Onyango. It was my pleasure to host this fireside chat. Enjoy the rest of the conference. And we're done for our Regulating for Innovation. Thank you very much.
Thank you all. Thank you, Marv. Thank you, everybody.
Thank you.